The commodity market continues its steady growth. Energy has become not only a valuable commodity but also leverage in economic and political disputes. Thus, oil prices have already gained $35 since February 28. Yesterday, upside momentum in the oil market was fueled by the news that US President Joe Biden had imposed a ban on Russian oil and other energy imports. In addition to the US, such energy giants as British Petroleum and Shell announced that they would halt all spot purchases of Russian crude oil. The Japanese government also said that it was ready to work with other group of 7 countries towards banning imports of Russian oil. In this case, another 4% of the market will be lost. The only factor easing anxiety in the commodity market is that gas-dependent Europeans are not in a hurry to refuse from Russia oil, although they are also considering step-by-step plans for achieving energy independence. Furthermore, Moscow hinted that it could suspend the operation of the Nord Stream 1 pipeline. This also contributes to growing fears in the market. Against this background, energy prices are expected to continue rising. Of course, gas is the top gainer. Oil is following suit, steadily heading for new all-time highs. After pulling back from the level of $130 per barrel, Brent crude futures crept back up. Currently, the quote is trying to consolidate above this value. Obviously, the trading instrument is overheated and strong momentum is needed for a new round of growth. In any case, global oil sentiment is mainly bullish. Thus, as soon as market participants mull over the latest news, oil prices will move towards $140 per barrel. For now, there are no signs of a strong pullback yet. As for the foreign exchange market, the ruble continues its erratic moves. Today, the currency kicked off trading on the Moscow exchange at the level of 113 rubles, the upper boundary of the range. When the exchange resumed trading after a short-term suspension, the quote broke above that level and approached 120 rubles per dollar. The ruble has already managed to test 150 and even 170 rubles per dollar, but then returned to the 130 mark. Such dynamics came as no surprise as the world continues to impose sanctions against Russia. Even diplomacy cannot stop a mass exodus of companies from the country. Nevertheless, the Bank of Russia is trying to support the ruble. The regulator introduced new restrictions on currency transactions, including cash. This measure is intended to somewhat stabilize the situation in the foreign exchange market. However, the effect of the previous measures turned out to be temporary. In general, global sentiment towards the ruble remains deeply negative. From a technical point of view, the dollar-ruble pair continues to trade upwards, drifting around 130 rubles per dollar. Taking into account the measures taken by the central bank, the ruble may well try to par some of its early losses and drop to 112 rubles per dollar today. However, any decline is likely to be followed by a strong rally. While the geopolitical situation remains highly tense, the ruble has almost a zero chance of strengthening. Only temporary spikes are possible. As global risks are rising and the world is stepping up its pressure on Russia by imposing new sanctions, gold futures continue to gain. Investors keep fleeing to safe haven assets, including the yellow metal. After climbing above $2,000 per ounce for the first time since August 2020, the quote continued its upward movement. On Tuesday, the asset even managed to advance to $2,068, thus nearing the all-time high of August 2020 and the level of $2,073 per ounce. Obviously, gold is enjoying solid gains and demand for the metal is unlikely to subside in the near future. Until the Russia-Ukraine conflict is resolved, the precious metal will most likely edge higher further. On Tuesday, gold futures managed to overcome the resistance level of $2,034 per ounce. Then the asset headed towards new highs but pulled back from the $2,068 mark. Now this pullback has turned into a technical correction, so the quote may still slide to $2,020 per ounce. Given that the market trend remains upwards, the current correction may be followed by a breakout of the $2,070 level. Well, that's the forecast from our analysts. Please watch our videos and stay up to date with the latest news, and may your trading be lucrative. See you back soon.